Good morning, everyone. So this is about a kind of picture about the idea and the topic about using the machine learning in financial market and especially in the stock market. And I'm宋豪漳from the business administration of national treasury. Okay, and this course is about some kind of topic and important issue in the course of fintech. So this is about the overview of this slide. So basically we should understand what kind of feature in terms of machine learning. Then we should talk about the feature and the stock market. For example, maybe about based on some kind of review, some kind of book in finance, talk about the feature of stock market. And okay. So first we should mention some base idea or feature of machine learning. For first of all, we should know about that the famous well-organized, well-done area in machine learning is in some kind of area such about in imaging, in voice recognition, in gambling, in automatic vehicle, and in robots. And this kind of area is very famous and very well done area in machine learning. And basically, this kind of area has some kind of feature. For example, this kind of feature about, and this kind of one feature for this area is about this area. Have a large, have a big beta area. It means that, for example, in image recognition, usually we can find out some kind of big data in terms of number of over 61 million, and using kind of million as kind of parameter as input in the input or in the feature in machine learning. So it's been based on this kind of feature. It's been that when we conduct some kind of machine learning, we can using a lot of mass number of training data. So this kind of some kind of big data area is kind of benefit. This kind of benefit is good for the research to generate new prediction, new out of sample prediction for this kind of experiment in terms of machine learning. So the second feature for this area is that for this area is kind of the second feature about this have a high level of signal to noise ratio environment. So the idea of high signal to noise ratio is mean that the predictability within the machine learning within this kind of system. So if this kind of system have a high level of signal to noise ratio, it means like it have a high level of predictability. So it means that we have some kind of useful feature and provide some useful efficient signal relative to noise. And so in one area have this kind of feature, it means that the signal will dominate randomness and have a low level of signal to noise. Where the one area, in the other hand, one area have a dominant by randomness, it means that have a low level of signal to noise ratio. And basically, I just mentioned about this kind of area, such about image recognition. For example, if one guy handling 1,000 of IG photo, you can correctly identify those contain the case and the successfully with high level of successfully rate, almost 100. And it's easier to generate for us, for people, to distinguish between the signal to noise. Signal is maybe we can easy to identify the feature of cat. The noise means the noise are related to the cat, the background feature. So this is just about one benefit feature of some benefit area that's good, useful in area in the tool of machine learning. So let's back to the financial market. So the feature of financial market we can come from this kind of book. This book is from the author of Benoit Vandenberg, year of 2004. The topic of this book is about the misbehavior of financial market in terms of factual view of risk, rule, and reward. So based on this kind of book, they mentioned some important idea. The idea is that he mentioned that stock price or stock return pattern are just like the turbulence. It means that just like stock price or stock return just like turbulence. It means that like turbulence, sometimes stock price will get high, sometimes it will get low. And sometimes the stock price will get explode, while sometimes the price will get pulse. So just like the turbulence. The stock price is just like this, and just like turbulence. And so this kind of example, some kind of evidence about why we can mention that stock price or stock return just like turbulence. So based on this, essentially, this evidence shows that when stock price breaks out, the big rise or big fall will be concentrated within a very, very short time, in very, very small short time. For example, in the year of 2018, 40% of S&P 500 index is partial return just happen within 10 days. And this kind of 10 days is just about lower than 1%. It's just about 0.5% of the total trading day within that year, within the year. So it's been a very high proportion of positive return was just happened within very, very short days. The second evidence shows that in the 911 incident occurred in 2001, and the NYSE exchange was closed for 5 days. And the 5 days later, the index fell about 7.5% in the opening day. And the stock price is high fluctuation within a short period. So this is called about cluster effect. So basically these two examples shows about stock price will be get up and get down, and will be get up or stock price will rise or down, happen within very short period. So this is first feature of stock price. The second feature or second character of stock price we can mention about stock price and stock market. Signal, some kind of signal, even economic signal in market. Signal will have a long-term correlation or long-term connect effect. For example, we can try to imagine that in the Sweden, all large companies do business with each other directly or indirectly. Mobile exchange impact solve. For example, mobile launched a new car model may steal the other first market share. Then, Sharp respond with more luxury new car and change a satellite position system to standard equipment without the need to purchase it separately. Then, after that, another firm Ericsson began to sell satellite position sector receiver. So this kind of economic signal, economic fitness from starting from one firm will be have some kind of spill effect to other firm within some area, some country. So you can imagine that this kind of connect effect may be still outside Sweden. So like a snowball and gradually spread out to the neighborhood countries such as Finland, and the Finland market is about Nokia and Norway and Estonia. And the BA score, although this effect is getting small, economics worldwide are still evaluating the effect. So imagine that kind of spill effect maybe happen in starting or happen in a much larger country, such as the United States. An enterprise action would have a more complex effect, a significant and powerful chain effect. For example, the stock price happened in 2007 in Lehman Brothers. This kind of firm is American firm. This kind of stock price happen starting from this firm will have a more serious, more significant spill effect over the world, not only in the United States, but over the world. Have a high level of network effect or spill effect. So this is kind of a second feature of a stock price. Economic signal have a long-term correlation or have a long-term kinetic effect, or we can say about a high level spill effect, network effect. And the third feature of stock price we call about scale effect. For example, we go back to the example on the turbulence. Turbulence can be quite dangerous. For example, the stress of turbulence, the average, the variation of water speed and pressure and price can change suddenly and dramatically at any time. But this kind of turbulence is not only difficult to predict, but hard to prevent, and even especially difficult to control or make a profit from. So, let's go back to financial market. We know that some kind of financial disaster. We had this kind of situation, this kind of event, financial crisis, financial disaster. The probability of this kind of event will maybe be very low, but it's not so low. It's not so low. Evidence is that the probability of a financial crisis and financial disaster may be about 10% or 7.3%, rather than 1 in 10 billion %. With this kind of percent about the extreme situation and like financial crisis that have in the classical construction in the star return. But this kind of structure is not so fit well in the real market. Okay, so that's kind of several features of stock price, stock market based on this book. Let's go back to another evidence of the feature of stock market. We can to another reference another book. This book about the network and Wall Street. So in general, the focus of this book tells that the main seller of stock price are firm managers. This means that firm managers have some kind of much large level of control power in stock market. So you can imagine that based on the better view of benefit in firm managers, let me always sell stock within when the firm is doing its best and when the public interest is high. But the investment impulse to jump on the Fed create the illusion of prospect but is unprofitable. So this kind of trader we call about speculative trader. So listen, what happens about the focus on this book? When the work is done in Wall Street, the main seller of stock price, the main controller of stock price is a fund manager. The second feature for this book is mentioned that the rapid change in stock market indicator means that it's very dangerous for us to use some kind of technical indicator in stock market and use this kind of indicator to enable us kind of input for stock price, stock return evaluation. For example, we have some kind of evidence showing that technical analysts only buy and sell after the trend is set up. The market changes rapidly, but so it is often too late to take action after seeing this kind of signaling. There's a group of people who take action before the signal appears instead of buy after the signal breaks through. And then we think about another feature of stock market is that they have a high asymmetry in stock market. So it means that in stock market we have some kind of issue related to agency problem. Asymmetry information means that based on this kind of idea, based on this book about skin again, the high asymmetry in the daily life. Also include the tablet. Yeah, in this book, tablet mentioned that don't tell me, it means the investment. Don't tell the investment that the analyst think it's going to happen, but just tell the investment what is in the analyst portfolio. And the tablet also tells us that. Or maybe just mention about develop giving some kind of advice that we got to know more detail about what kind of portfolio, what kind of detail within our portfolio. And he had some kind of very good advice. He mentioned that don't just listen to the people who make a living by giving advice to others. Unless this kind of advice is wrong and you will be suffer. So this kind of expert is mentioned about some kind of stock analyst, financial management specialist. And another feature about as mentioned in the stock market, there will be high level of education problem in the financial market. In terms of education problem, what I mentioned is that they have some kind of gain and loss computation is mentioned in some CEO computation. It's been when financial management have possible gain for banking financial management is far exceeds the possible risk we bear. So based on this kind of situation, you can imagine that it's very difficult for the financial management will be very careful about the plan, the portfolio they make for their client. So this kind of people is similar, can also fit used to the CEO in the firm. They have some kind of, in general, they have some kind of education problem for the financial management in banking or you're CEO of a firm. Okay. So another feature about the stock market is it may not some kind of noise trader, okay, or also know about the retail traders. They trading based on what they learn for social network and social media. So it means that this kind of market or this kind of stock, we can call it about mini stock. Provide some kind of mini stock example. The well-known mini stock example we have in the year of 2021. In the earlier 2001, in the example based on some one US stock called about GNU, 修炼 called about GNU, 副列包 called about GameStop event. In general, in this kind of GameStop event, some retailer communicate with each other in some social media. The social media called about Reddit, and then they have a community with lot of retailer buyer. They communicate or coordinate on the social media in Reddit, and then they do a trading based on this kind of trading platform, Robinhood, and then they pay again this kind of retailer buyer. They come together to pay in stock market and GameStop, and against some kind of hedge fund Wall Street, because this kind of retailer standing on the long position on the GNG, but on the other side, the hedge fund Wall Street standing on the short side in the GNG. Besides, retail buyer, this kind of retailer not only stand on the long position in stock market, but also standing on the long position in the option market, ready to get GNG. So it's been based on this kind of option market power, they will be enhance the low power, low position power of GNG. So this is the more detailed chart about this kind of GNE event. The key skill, we call about they call about Rory Keaton, and he's a leader for the retail investment. And they organize all the leaders, Rory Keaton organize all the retailers and Robinhood, and to play against this kind of hedge fund in the Wall Street. This kind of hedge fund maybe about this guy, Ken Griffey, and Kabi Parky, this kind of CEO for some hedge fund. So provide this kind of, from this kind of figure, we know about some kind of evidence. From this kind of evidence, we show that this is based on the GNE, based on the price, stock price, and the stock activity environment and public interest on the GNE. What do we find from this kind of figure? What do we find that there's a increasing coverage of this stock on social media on this kind of here search trend for this high level of search trend for social media for GNE. But at the same time, we can find we have a high level of turnover rate and high level of stock volatility, high level of stock return or stock fluctuation for this fund at the same time. So we say that increasing coverage of stock theory and social media platform may contribute the increasing of stock trading and stock price on this fund. And this is another evidence for the we can find out before the year of early day of 2021, the stock price of GNE will be quite stable. But suddenly, in the day, maybe around the day of January 20, starting from January 2022, the stock price of GNE will suddenly increase within just maybe about 2 weeks, 3 weeks. The stock price within this kind of period, stock price of GNE will be increasing with maybe about 2 times, even over 2 times, even 2 or 3 times of the stock price of GNE. But maybe just in the early day of same year of February, the stock price of GNE will go down. So you just will find out stock price will go very high within a short day, but will go very down within a very short days. Okay, so this kind of trend that I just mentioned about. Before the day of the early day of 2021, the stock market of GNE is pretty stable, but suddenly in the early day of 2001, stock price 2021, the stock price of GNE, stock fluctuation of GNE will happen very high, and but starting get very high and then suddenly get down. Just that kind of issue will be happening just very short period. This is another evidence that turnover of GNE. The turnover rate of GNE will be very popular just within a short day in the early day of 2021. Okay, so what I mentioned is that I just mentioned in general this kind of who will be trying to buy the stock price based on social media like Reddit. In general, it's mostly people who try to communicate the idea on some stock on social media. This kind of base is just about retail investment. But retail investment is they have some kind of sentiment on this kind of doing stock return on social media. So here, in conclusion about this kind of effect of the stock price, stock move will be generated by social network effect or social media effect. This kind of issue can find us. Initially, stock investment receive news, authentic, and focus on one element. So here, there will be some kind of initial display. And put this on the example of stock price on the GNE. In this kind of initially investment, retail investment focus on plan to private online. Then short-term investment bid on network spillover. We call about speculation investment. So based on this kind of speculation investment, some GNE or event of GNE, some institution investment are low standing and low position on GNE. So this could be called about the momentum effect or fundamental momentum effect. Then the third opinion, this kind of idea. Maybe like people may think about this firm, GNE, may have worse to investment in terms of based on momentum effect. So this kind of moment effect, opinion spill spread through the network. We call them mania or emulated. So basically, we use this kind of idea to the GNU. It means that more and more people heard about this kind of GNU, and it's all about local bias and network spillover effect. Then in the fourth, there will be some kind of influence from this kind of phonetic. We call about authoritative blessing. For example, in the event of GNE, this kind of influence is Elon Musk. They tweet a link and will call about Wall Street Bet. So based on the announcement from the Elon Musk on Twitter, they will make some kind of access volatility on GNE. So in the fourth, rational trader bet on the reverse on this kind of fund. We call about insider sell out. So to the event of GNE, institutional investor will sell out this kind of fund. We call about this kind of strategy called value investment. Finally, fundamental review of phonetic gradually learn. So we call about crash, revelation, or revision. So go back to the GE event. There will be start jump in the end of January and March, and March month of early announcement. So we call about no run reverse and value effect. So based on this kind of trading starting from the social media, it starting happened in the GNE, but also happened in other United States fund in the same time, in the early days of 2021. For example, in the GNE, in the ANC, in the BlackBerry, in the Best Bet, beyond, in other fund, they have a same stock pattern. Stock price will get high, maybe in the middle time of January of 2021, but will be stock price will be starting to get down just about 2 weeks. 1 week or 2 weeks later. And this is just mentioned. So there is more detail about it. The idea just mentioned about stock price, social media affects stock price, in that period for another in BlackBerry, in the bad beyond, in other fund, in the Express, another fund about is another fund. And then we find out in this kind of evidence we show, besides this kind of evidence shows about the stock price in that time will be simultaneous, accompanied with another feature about the mention on social media. So we can see that high level mention on social media will be simultaneously will be high level or star return or star pattern. It's kind of similar evidence come to another one. ANC and Coast, Nokia and Trivago, another Custom, Multi-Time, another American Airline, another Toss Road, and another Sunday Road. So that's it.